This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look at again at the gold market. Well guys, as usual we'll start from the daily time frame chart and see that the trend has shifted bearish on the previous week. And at the first glance that market looks like the starts the retracement to the downside as we have expected, since this is the completion point of this ABCD pattern, right, the Fib resistance, so that is the resistance agreement. And at the first glance it's okay, that everything looks like in order, so market action has started and our destination point stands right here. So by some reasons we expect that market probably should reach an area between 1280 1283, because that's the confidence support daily oversold. Very close there will be the new monthly pivot point of the March. Also that is the previous support resistance area, daily oversold as I said, and 1618 extension of the possible ABCD pattern that could be formed here. So following by the gold's habits to show the deep retracements and to retest broken areas, following the idea that this is in fact the first reversal swing to the upside, market could show the deeper retracement. At the same time, as we have taken the short positions here, right at the first move to the downside, so market also has formed the bearish engulfing and so on. Well, but by some other reasons, I still have some warnings for some concern on the possible downward action, and this I a bit worried that our happy with this downward action that has started will be not as long as we have expected initially, because this price action that we now see for recent 3 days, it's a bit lazy. It's not very typical for the development of the retracement. The market hits significant resistance, so it's too slow, and that's a bit worrying me. And that makes me think that market really could not reach these areas. And I will share with you with my warnings, with my concerns that I see on the intraday charts. First of all, on the hourly 4-hour time frame chart. On the 4-hour time frame chart, first concern is the shape that market is forming as the second part of the head of the possible head and shoulders pattern on the 4-hour time frame chart. So if you contract this, you'll clearly see this possible head and shoulders pattern. But take a look how the head is developing from the right side. This is some sort of the ABCD action that's not really typical for head and shoulders patterns. It's a bit detail that stands a bit outside of the normal head and shoulders development. So maybe we will get the head and shoulders, maybe it will work, but in general this is not very common for this pattern. The second and the most important concern, most important, I could say, problem for this reversal pattern stands right here. So you can see this hidden divergence, possible divergence with the MACD indicator. Since market has not reached the new low here, but MACD shows the new low or at least the equal lows. That is the hidden bullish divergence that suggests possible upward action. What this action will take shape, it's very difficult to say right now. Maybe market will show just minor bounce. Maybe we will get something two-side head or something of that sort. But that in general still holds the problems for our short position that we have taken right here. Okay, that's why I think that now is time to tight stops at least at the break-even, or maybe even to these highs, because when the market stands with the ABCD, let's say it will be even ABCD as the part of the head and shoulders, but market should not return right back up and taken out of these highs if this is really the head and shoulders. That will be not very typical for this pattern. That's why I think that we should either tight stops at the break-even where we have entered somewhere in this area, or even move the stops slightly higher than this high, slightly above these highs. Because any move to the upside right from here, taken out of these highs, will not be standing in a row with the normal development of the head and shoulders. And that hidden divergence makes this scenario possible. So that's just a greater risk that we could meet in the beginning of the week. And we should understand and we should think how we could contract this risk. So that is our task right now. If market will proceed with this head and shoulders as it should, well, that's okay. That in this case market probably should reach this area. On the hourly time frame chart, I see other reasons for some warning signs that market really could turn to the upside. Although, as you can see on Friday, market has proceeded with this butterfly and even has shown some slight move to the downside, as we have discussed. But this action is also a bit not as stable as I would like to see with the butterflies. And also, guys, market has created the bullish divergence where they may see the indicator. All these moments currently do not mean that market will fail with the downward action and will turn right now to the upside and continue upward trend, although this could happen. But these signs now do not suggest that. But these signs are hidden menace for the short position that we now have, and we should protect our position and to significantly contract or totally eliminate the risk that we have right now with this position. Because market could give us some surprises. Maybe market could form some kind of the butterflies here to the upside, or even some reversal pattern will be formed around 1340 area or something of that sort. We do not know, but signs that we now have in the short-term perspective point on possible upward action, either in the long term or in the very short term. But anyway, we should take it into consideration and do anything that we could do here for protection of our position. So in the beginning of the week we will monitor how market will behave with these patterns and what will change in the beginning of the week, whether our scenario for the downward action will be valid or not. But right now, as we have the positions significantly higher than the current market stance, we have the time to move our stops to the break-even and just to watch what will happen.